Subject Quantity Surveying and Contract Management. Topic Valuation. Module 5. Dear students, let us understand the definition of estimate first. Estimation is the probable cost of work which is prepared before the construction is taken up, whereas valuation is the calculation of present value of property. The properties like building, vehicle, land, factory, etc. Valuation is the amount the property can fetch in the market if put for sale. The valuation may be higher or lower than the original cost. Valuation of property depends on its structure, maintenance, location, life, etc. If it is RCC frame structure, its valuation is more. If it is load-bearing wall kind of structure, its valuation is less. Similarly, if the structure or the building is maintained properly, its electrical and plumbing systems are working properly and painted periodically, then its valuation is more. If not maintained properly, its valuation is less. The aesthetics also matters in the valuation. If the aesthetics is good, its valuation will be more. Regarding location, if the structure is located adjacent to the main road or in the urban area, its valuation will be more. And if the building is located away from the main road, where the reach is difficult, or in the rural area, its valuation will be less. Similarly, if it is a recently constructed building, its valuation is more. That means the life matters in the valuation. If it is an old building, its valuation will be less, etc. and so on. If I can give the example of a vehicle, the purchase cost of vehicle may be say rupees 60,000, a two-wheeler bike or a Honda Activa kind of vehicles, which if it is say 5 years old, its present cost will be rupees 30,000, so its valuation is reduced. I have exception for this example. So in long back, about 30 years before, there is a vehicle called Yamaha RX100. Its selling price by that time was rupees 15,000. Even after 30 years, if the same bike is put to sold, its present price is more than 15,000. That is, it sold at around rupees 20 to 25,000. Therefore, the vehicle like valuation may be higher or lower than the original cost. Important question: what are the purposes of valuation? Dear student, imagine that you are a landlord having several acres of farmland with the certain kind of crop, say areca, rubber or so. The land has borewells, trees like jack, teakwood, etc. The land with road access, and you want to sell that land, or say you want to buy another similar such land, then the valuation is required. Or consider another example, you want to buy a second hand car, say Toyota Innova or Fortuner. Its present price or the valuation is required. Second, for taxation, the authorities like municipality or Mahanagarapalike authorities calculate the tax based on the valuation of your property. Number 3, rent fixation. The builders or the developers fixes the rent of the flats in the apartment based on its valuation. Number 4, security or loans. Your parent might have this experience. If anyone wishes to take bank loan, mortgaging his building or property, then the valuation is required. The bank can sanction the loan amount against security of your property, that is called as mortgaging. Next, compulsory acquisition. Say if the property or the land is acquired for construction of a highway or dam by the government, then the compensation is to be paid to the owner of the land. So that is based on its valuation. Also, valuation is done which is required for calculation of insurance amount or for the periodical maintenance cost, etc. So we have understood that the valuation means the calculation of present value of property. There are 6 different methods of valuation as listed here. Rental method of valuation, direct comparison with the capital value, valuation based on profit, valuation based on cost, development method of valuation, and depreciation method of valuation. Let us discuss one by one. Rental method of valuation. It is calculated as net income is equal to gross income minus outgoings. I can put it like net income is equal to earnings minus expenses. A person has earnings from various sources like business, agriculture, tuition, deposits, mutual fund, etc. Also, the person has many expenses in the form of tax, repair, rent, bill payments, sinking fund, etc. Finally, net income is calculated is equal to gross income minus outgoings, and valuation property is equal to net income into years purchase. You will understand this better when we take up the problems. Second method, direct comparison with the capitalized value. Valuation is computed by directly comparing with the similar property in the locality. Number 3, valuation based on profit. Again, valuation is equal to net income into years purchase. We shall solve problems next sessions. Valuation based on the cost, which means valuation property is based on its cost of construction minus loss due to depreciation minus loss due to obsolescence. Depreciation in the sense loss of value of property due to deterioration, wear and tear, etc. Obsolescence means loss of value because of structure being out of date in style, etc. Number 5, development method of valuation. This method is used for the valuation of undeveloped land which are later developed and sold. The total cost required for development is noted down. Number 6, depreciation method of valuation. Here the valuation is done by adding the present value of land and other utilities to the depreciated value of the building. Let us discuss few definitions related to valuation. So, freehold property. Here you are the absolute right to use your land property within the government guidelines. You are the RTC holder of the land. You can construct the building, you can sell the land, you can give the land for lease, etc. You have complete ownership about the land. Leasehold property, which means the leaseholder will have the possession of the property as per the lease agreement. Usually it is for certain number of years. Leaseholder is not the owner of the property. Gross income. It is the sum of all earnings of a person from various sources. Example, earning from business, agriculture, tuition, bank deposits, mutual fund, commission, etc. Net income is equal to gross income minus outgoings. The outgoings are the expenses incurred for taxes, rent, bills payment, fuel, loan interest, etc. Next, sinking fund. It is calculated using an expression. We shall see to that when we solve the problems. Example, let me explain what is sinking fund. Imagine that you have built a structure whose cost is 1 crore and its useful life is 50 years. Now, you can set aside a fixed amount annually in the bank which keep on accumulated year after year, so that the total deposited amount becomes the cost of the building at the end of 50 years. Now you can rebuild the structure again using this amount. This annual deposit is called as sinking fund. If the owner neglects this provision, then he will find it difficult to rebuild the property upon the end of useful life. Obsolescence. The loss of value of property or structure because of its out of date in style, in design, etc. is known as obsolescence. For example, these days we like to have big bedroom with attached bath in our house and hall, kitchen, dining being attached, and also we look for vastu. If the house is built without considering these facilities, then the house will lose its value, though it is strong. Next, depreciation. It is a loss in value of property due to deterioration, wear and tear, decay, etc. For example, a vehicle will lose its value as it gets aged. Similar is the case with the building. Methods of calculating depreciation. There are 4 methods and we shall solve problems for each of these methods. Method 1, straight line method. Method 2, constant percentage method or declining balance method. 3, sinking fund method. 4, quantity survey method or detailed estimate method. Next, let us move on to scrap value. It is the value of dismantled materials. Sometimes scrap value is 0 or negative. For example, for RCC work like beams and columns, cost of dismantling is more than cost of construction. For example, cost of construction, say rupees 500 per CFT, cost of demolition will cost around rupees 1000 per CFT. Therefore, scrap value is negative. For a machinery, the amount you get when the dismantled parts are sold in the Gujri shop is called its scrap value. Salvage value. It is the value at the end of the utility period without being dismantled. Note that scrap value is for dismantled materials, whereas salvage value is for without being dismantled. Example for salvage value, say Maruti Omni car used for transporting school children may be sold at the end of its useful life. The purchaser may use the same Maruti vehicle for transporting groceries or as a footpath side canteen. The sale price of Maruti Omni here is a salvage value. Please refer the PPT slides for the definition and explanation of following terms: market value, book value, annuity, capital cost, capitalized value, years purchase, mortgage, fixation of rent. Thank you, dear students. If you have any questions, please feel free to ask or you can contact through WhatsApp. Thank you.